Hello, this is Rashid Khan of TAINA Technologies. Over the past year, we have developed templates for withholding statements that apply a standardized data dictionary and universal formats to simplify the process of completing and submitting withholding statements to custodians or agents. I have put together this video to familiarize viewers with the templates. We'll walk through the various templates and provide information on why they were developed. Additionally, we will create an alternative withholding statement. These templates are available in the master file with tab for each type, or available to download individually with sample data for training. If you have any questions, please send an email to marketknowledge@taina.technologies, and we will gladly respond to any questions you may have. As you can see from the screen that we are displaying, you have various tabs. The cover page, which is an instruction page. Glossary, which is a definitions page, provides the standardized data dictionary as mentioned in the introduction. A detailed statement, simple statement, alternative statement, pooled statement, and the reference charts that are being used for each of the drop downs that are available within each statement. Going through the cover page is designed as an information page so that regardless of if you are a seasoned professional that is used to withholding statements, or someone who is an analyst or new to the process, they can easily acclimate themselves to the process and what the substance and content of the withholding statements are. It actually includes specific breakouts on what is acceptable under the alternative procedure, how you would and when you would be able to apply a pooled withholding statement, as well as specific information around the rules for certain NQI obligations. Again, we do provide a glossary. The glossary will identify in the master template, will provide you with the field name, a description of the field, whether or not the information is required or optional. And we have two different types of requirements. It could be regulatorily required or required as defined by the industry. We also have some conditional required fields where if a specific election is made, the information must be provided. And examples of the data that would be populated for each field, or a format value of what should be populated for a specific field. Within the master template, you'll also see that we identify which fields are required for which template type. It's simply by selecting for the X's, will identify which fields are part of which template. And as you can see, for the most part, if it's on one of the simplified or pool templates, it will also be required as part of the detailed template. Obviously, the idea is that the detailed template covers the most comprehensive data. The detailed template, as we are showing here, is designed so that it can be used in conjunction with the form that is being supplied as part of the withholding statement, or in many cases, if you do not have the form but have all of the relevant information about a beneficial owner or any of the structured entities within a pass-through, you can provide that information and the detail so that an actual withholding agent or custodian can build out a reporting record directly off of the withholding statement even if the documentation to support a treaty election or a treaty details are missing. Obviously, if it is missing the form, you can expect that the treaty would not be applied, even if identified within the statement. So this will allow for any custodian or agent to build out a name and address record and create a books and records detail of each beneficial owner or each party within the structure, including identifying which type of form is expected for that particular party. As you can see within this structure, we do identify certain intermediaries within the structure. This is so that we can allocate to them. In this scenario, we're not allocating any amounts directly to the intermediary, but we are creating linking and relationships to the beneficial owner within the intermediary structure. Additionally, we do tag in case you do not have a form type, whether it is a foreign or presumed U.S. person. Is there an expectation of treaty benefits? Have they made a proper election related to limitation on benefits? And this comes in handy when you are executing your 1042Ss, because in order to provide treaty benefits, in many cases, you must have a limitation on benefits statement attached to that treaty benefit. We capture the Chapter 3 recipient code as well as the FATCA status. Now, the FATCA status also includes the FATCA recipient code, both of which are required in order to create a properly executed 1042S. Both are also required in order to effectively identify if you're applying withholding under Chapter 4 or Chapter 3. We also have the income allocation statement. We do have specific information here that require that the percentages add up to 100%. In this particular scenario, it does not, but we are planning on deploying. Oh, sorry. In this case, it does, but we are actually planning on deploying some controls in order to ensure that if it does not add up to 100%, that we would create an error and there would be some referential data integrity around the details. Right now, it is a little bit complicated because whenever you try to do that in Excel and you move from one cell to the next, if it's less than 100, it flags an error. We're trying to do it so that in such a way that only upon moving off of the column will it do that referential check. In addition to the allocation statement or the allocation percentages, we have provided 4 fields that allow you to identify specific withholding rates. If there are exemptions, it does allow you to provide the exemption code. This is required in order to apply the proper exemption code as it relates to the Form W8. In most cases where we have portfolio interest, we are expecting that the exemption code be aligned to the portfolio interest exemption. We do provide for interest where it's non-portfolio but may also be eligible for exemption or reduction. We have the various dividend classifications so that where dividend rate could be reduced under treaty, either paid by a corporation or under a REIT clause, we would be able to capture that rate. This data can be expanded, so it is extensible that if you add additional columns and additional exemption code, additional corresponding exemption codes, most processes will be able to consume and execute against that detail. Moving on, we have also provided for the simplified statement. Simplified statement is similar to the detailed statement, but it removes all of the industry related optional data that was requested in order to build out a client record. It has just specific baseline information that is coming off of the form in order to create a proper withholding calculation. And again, there is a reconciliation between the withholding statement and the forms provided, so that if a form is missing, you may be flagged or identified as having a unknown recipient because you have a recipient with no form, or you will be flagged as an undocumented recipient. Similar to the detailed statement, it also provides for the FATCA status, the Chapter 3 status, and the withholding allocation. Similar to the detailed statement, it also provides for an extensible portion of information to be provided related to any treaty rates that are being elected. For the alternative statement, we have this intentionally blank. We are actually going to complete this statement in a moment after I walk through the pooled statement. But as you can see, the alternative statement, in line with the allowances under the alternative procedure, one does require that for each identified entity on the statement, there be a corresponding W-8 form that is submitted or has been submitted to the agent or custodian. And that will allow for you to just reduce the amount of information being provided, because the additional information that is necessary for withholding and reporting will be consumed off of the Form W-8 or Form W-9. Last template that we want to walk through is the pool template. Now, this is used primarily for qualified intermediaries. It can also be used by NQIs that are providing a pooled have made a pooled election and who are providing the information under the pooled election throughout the year with the forms and the finalized allocation being provided at the end of the year. It does also allow for use under the joint account election and does provide for you to utilize this for certain partnerships and trusts that effectively come under a QI agreement. The information that is provided under the name would correspond with a treaty or a pool associated with the pool types that are required as part of the Form 1042S, as well as the FATCA statuses and the Chapter 3 statuses being aligned to the pooled recipient codes on the 1042S. Again, there is an expectation that the allocation be reconciled to 100%, and that you identify for the specific pool what income and the associated rate that would be assigned across that particular income type. It does require that where you have a 30% income or 30% withholding rate for non-treaty clients, that it be separated from any 30% withholding for recalcitrant clients, primarily because those are reported under different boxes. One is FATCA withholding, the other one is going to be Chapter 3 or NRA withholding. And does provide for you to have multiple income types. One of my recommendations to people is that when they're completing this form, if you are completing the form for more than one income type, that you replicate your rows and separate. You do not try to put your interest, even if the percentage of ownership is the same, that you do not try to put the interest and the interest exemption in line with the dividend exemption, primarily because the exemption codes might be different and that may influence the reporting. So what I would recommend is that if you're showing someone exempt for interest, you create a second row and you populate that information in the second row, only populating the interest box and the interest exemption code. So taking a step back, we mentioned that within the template, there are specific drop downs that allow for ease of the population of data. We do recognize that this information is updated on a periodic basis based in line with the 1042S and whenever the forms may be revised. Additionally, we understand that the forms may be revised in 2021. So what we have done is we've created specific reference tables, and these reference tables would be updated and we would publish out new information or new templates whenever the forms or the 1042S have modified these codes. Additionally, the tables are set up and the templates are set up so that if you'd like to take ownership of the template of the tables, you can actually make those updates and those changes yourself. The LOB information is also coming off of the 1042 instructions. Additionally, we have captured specific GIN structure information in order to help with simplifying and validation of the GINs provided in each of the templates. We have also provided the exemption codes that are acceptable on the 1042S, as well as a series of various drop downs that cover things like accounting method, whether you need to apply an X date record, a record date allocation, or a payable date allocation. What types of forms are active and in the system, as well as what 10 types are currently expected as part of the statement. Finally, there are beneficial owner types, as mentioned before. We have intermediary, foreign person, foreign exempt, foreign entity non-exempt, U.S. individual, U.S. entity exempt, and U.S. entity non-exempt. This should cover the full spectrum of entity types or presumed entity types that could come out of the process. So we're going to actually go in and populate an actual alternate statement just to show how easy it is, and allowing for a shorter time frame because don't want to take up too much of people's time to walk through how they would execute and do this process. So for this, we're going to just type in an institution name. This information is dummy information, and we've utilized it for several different demonstrations that we've done over a period of time. It does allow us to capture and provide some details that make it easier to execute. So what I'm actually doing is aligning the name of the institution with what we have recorded on our books and records within our demo system. There is a validation that is done against this information whenever we upload these forms into our system. And I know most firms have their own validation processes that they would utilize and deploy in order to also validate that information. So we do capture intermediary GIN here. If applicable, there is There are very few scenarios that we are not expecting a GIN to be populated. So the process itself should always validate that a GIN is required wherever the FATCA status that is being selected in this dropdown, it requires an actual GIN. So we're going to actually select registered deemed compliant reporting model 1, which would require a GIN. We're going to populate our GIN in this box. And that GIN should correspond with the GIN that's provided on the top level W8IMY and should be validated versus the IRS's GIN list. We'll also provide an effective date just to identify when we want to have this form start. As well as select the Chapter 3 status as a non-qualified intermediary. We're going to populate the name. And if you have this information in a separate on a separate slide, or let's say you have the an actual form that you're pulling this information from, you can actually copy and paste the information directly onto the system, so that this way it makes it a little bit easier. The reason why I didn't do the copy and paste is primarily because I'm recorded, and it will the actual frame jumping back and forth will be very disorienting. If there is a business name, you can provide a business name. Especially in the case of a disregarded entity, we do not have one in this particular scenario. We will actually provide Panama. We can actually, you can actually set it up to use tax residency as it's linked to the ISO 3166 list of countries. We have not done that because we realize that not everyone is leveraging that same list. Some people have relied on their own internal systems in order to drive the country of tax residency, especially if you have countries that have changed or have been modified over the past several years. We'll actually provide a FATCA status for this client. And the FATCA status that we're going to select is certified deemed compliant, non-registered local bank. Identify the Chapter 3 as a corporation. These are currently listed in the order, in the numeric order that they are identified, so the recipient code order. That can actually be changed and modified if you go into the Chapter 3. If you resort this file, the drop downs will match whatever the sort order is that you select within this file. Okay. So as you can see, in populating the information, it's fairly straightforward to just type, or I'm going to actually copy and paste some information in. so that you can see exactly how easy it is to copy and paste the details directly over. We're also going to just show this as a registered deemed compliant FFI Model 1, also as a corporation. And we're just going to populate this with 65% so that we have an allocation. And as I mentioned before, it's pretty straightforward just to add rows. You can make this as long as you'd like. In the case, so we're going to make one modification here. What I will do is we'll modify this to 5%, and I'm going to add and show how we would identify a intermediary in the group. So again, we're just going to copy and paste some information in. Just showing that we have another intermediary in the chain. We're going to make it a sponsored direct reporting. Yep. Jumped the gun. And you can actually obviously increase the size of the entity as you're setting them up, or you can increase the size and the fonts as you see fit. We're going to make this a non-qualified intermediary. We're going to identify that 60% is being allocated to the non-qualified intermediary, and obviously we now need to show the ownership of that non-qualified intermediary and who the ownership is related to. Now that can actually be done in a separate statement where you show circles as the institution name, or you can embed it within the same statement and just provide it as a subordinate level of information being provided within the statement. And we're going to populate the rest of the detail here. Bermuda, Ukraine. I'm going to make this one a participating FFI. We're going to provide it with its GIN. Two. So what we're actually doing is just, I think I had one too many in there. I wanted to correct that. Identify that as a operation. We're going to just define this as 50% each within the allocation of the IMY. Now, in a reconciliation, it will ensure that the sum of each level adds up to a 100%. So it's showing the first level as 100% and the second level as 100%. We have no gin. We're going to make this a publicly traded NFFE. Use this as a corporation. And we have a fully executed alternative statement. Again, it's fairly straightforward, very simple to use. As I mentioned before, whenever you're dealing with an intermediary, you can either structure this so that you have a single statement, or it's flexible enough that if you wanted to do separate statements, just as simple to create separate statements, and allows for you to build a process around consuming either one or multiple statements for a tiered IMY, where you have a lower level tier that is providing the information. These templates were designed to be flexible to meet your needs and to fit your process, so that this way it allows for ease of use. Again, if there are any questions or if you'd like any additional information, please email us at marketknowledge@taina.tech. Again, email us at marketknowledge@taina.tech. Thank you.